For countries all around the world, gold has long served as the foundation of prosperity and a sign of security and confidence. It has withstood financial crises, world wars, and the fall of empires. However, it has been reported that Australia and New Zealand, two of the most resource-rich countries in the world, are about to take an unprecedented step by using that very objective to support a digital asset. Establishing a hybrid financial model that combines the speed and transparency of blockchain technology with the dependability of physical resources. These countries have formally valued that digital asset, XRP, at $120,000 a coin, if the leaked information is correct. This has completely changed the way we think about money, commerce, and digital value. It's not a crazy theory. It is a component of the Pacific Digital Trade Pact, a recently revealed strategic agreement that purports to define a bilateral effort between Australia and New Zealand to support XRP as a cross-border settlement currency using a portion of their respective national gold stockpiles. Why? Leverage, trust, and speed. These two nations have long maintained a conservative approach to finance while sitting atop mountains of natural wealth, substantial commodity exports, strong fiat currencies, and strong connections to Asia-Pacific commerce. However, they are now taking a risky turn by linking their gold to a blockchain-powered asset in order to establish a new trade standard for the 21st century, given the growing global digitization, unstable fiat markets, and changing trade ties. Let's be clear. Crypto adoption isn't the only goal of this action. It has to do with the evolution of money. Wealth used to be transported by institutions and kept in vaults. Value must now be programmable, interoperable, instantaneous, and borderless. SWIFT and other antiquated systems are too costly and slow for a world that is changing quickly. Despite their innovation, Bitcoin and Ethereum have drawbacks including inefficiency, sluggish confirmation times, excessive energy use, or scalability issues. The inflation of fiat currencies continues to be the basis for stable coins. In contrast, XRP is designed for institutional-grade use cases, speed, and low cost. As a bridge asset, it is in a unique position, a digital value conveyor belt connecting currencies, institutions, and assets. Australia and New Zealand are providing XRP with a sovereign-grade floor of confidence, something no other digital asset has, by anchoring it to gold. Sources close to the agreement claim that the $120,000 valuation isn't random. Its foundation is a fractional reserve model that makes use of estimations of each nation's gold reserves. Together, they represent verified national reserves, multiplied by the amount of trade they hope to enable through XRP in the upcoming 10 years, leads to this exorbitant price. In actuality, it is the opposite of inflation. We refer to this as value compression. To absorb and manage enormous liquidity, they just raise the price per unit rather than, minting more coins or printing more cash. However, with little digital weight, consider it to be digital gravity, reducing vast amounts of economic value into a smaller number of more powerful units of trade. According to a prominent commodities trader, XRP's efficiency and the stability of actual gold make for the ideal combination. A fractional reserve model of their combined gold holdings yielded the $120,000 figure. Additionally, this truly indicates a significant change in geopolitical monetary policy. Australia and New Zealand are doing more than just protecting themselves from fiat volatility by supporting XRP with gold. In the Asia-Pacific area, they are establishing themselves as independent liquidity providers. They don't have to worry about currency manipulation by superpowers, rely on US dollar liquidity, or request permission from the IMF. They are essentially establishing a blockchain-powered, reserve-backed, trade-optimized regional digital gold standard. Additionally, the most important trade corridor was affected. China, South Korea, Indonesia, Vietnam, and Asia are all important regional partners. As dollar supremacy continues to decline, many countries are already moving towards alternate settlement methods. To be honest, the Pacific Pact may serve as a model for other agreements. It is a logical progression from the perspective of infrastructure. Australia has previously made significant investments in blockchain projects for customs processing and trade operations. The Central Bank of New Zealand is renowned for its financial experiments and has been investigating digital assets for years. Both nations have strong legal systems, contemporary banking systems, and comparatively low levels of corruption. They are perfect for exploring a novel hybrid financial paradigm that involves digital liquidity backed by gold. It's difficult to exaggerate the effect on XRP holders. Today, the majority of XRP holders purchased it for less than $1. None of them anticipated a sovereign coalition pricing it at $120,000, but some joined during the heyday of 2017 and others during the gloomy days of SEC lawsuit. that transforms small holdings into enormous fortune. Being at the forefront of a monetary paradigm shift is more important than simply becoming wealthy. Should the Pacific Pact be ratified, XRP will be more than just a digital asset used for speculation. It will develop into a digital currency backed by a sovereign and valued according to trade flows and national gold reserves. The argument shifts from XRP versus SEC to XRP as the international digital settlement layer as a result. Already renowned for its speed and affordability, the XRP ledger serves as the cornerstone of a regional trading economy based on gold, but fueled by cryptographic trust. So let's take a moment to discuss numbers. In actuality, Australia possesses an amazing 80 metric tons of gold. Although the reserves in New Zealand are smaller, they are nevertheless increasing. Even if we adopt a very cautious stance and tokenize only 5% of their total gold holdings in order to facilitate digital settlement through XRP, it would result in a base value floor that is far greater than the current price of XRP. The logic genuinely supports six-figure valuations when you scale that up to levels of international trade, and keep in mind that just includes two nations. The price cap for XRP may possibly become virtually infinite if this model is adopted by countries like Canada, the UK, or even those that are part of the BRICS. This is not a work of fiction. In reality, it's the intersection of technology and economy. People who follow the actions of central banks, trade ministers, and economies that rely on commodities are beginning to make the connections, even though many people in the mainstream media may be a little slow to pick this up. A paper pledge or even a CBDC won't be the 21st century's digital gold standard. It will be decentralized, programmable, and supported by a physical object. And this is what sets XRP apart from the rest of the competition. It's prepared. A network upgrade is not required. There is no need for new regulations. No Layer 2 workaround is required. Hundreds of financial institutions are already using it. It settles in a matter of seconds. It scales already. Legitimation and sovereign support were the only things it ever required. And it's getting just that now. What does this signify for the typical viewer then? That indicates that you are at the nexus of new railways and old money. It indicates that gold is being digitalized, and surprisingly, XRP rather than Ethereum or Bitcoin has been selected as the blockchain that will hold that value. The importance of that positioning should be very clear to you if you're already holding it. If not, consider whether this chance will still present itself after nation-states legally validate their actions, and what happens if other countries with abundant resources or gold follow suit. What happens if nations that support XRP with physical deposits and use it for international settlements, such as Kazakhstan with uranium, Nigeria with oil, or Chile with lithium, adopt the same model? In fact, XRP is at the core of what may be the emergence of a digital currency ecosystem backed by commodities. Additionally, this completely changes the regulatory discourse. After years of scrutiny from organizations like the SEC, XRP transcends its status as a token. It turns into a state instrument. To take that fact into account, regulations will need to change. Gold is not regulated like stocks, and a meme coin like XRP that is backed by gold is not regulated either. In addition to its speculative use, the framework will need to change to account for these assets' monetary utility. This is ultimately more than just a crypto narrative. This concerns the future of financial architecture, trade, and sovereignty. The globe won't be the same if Australia and New Zealand actually start their Pacific Pact. Additionally, the digital asset that was before valued at less than $1 might serve as the basis for a new international norm. Please like, subscribe, and share this video if it helped you predict what's ahead. Sincerely, the mainstream won't cover this till it's finished. Don't wait for approval. Take the lead. It's not simply history you're seeing. The front of it is where you are.